Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and with me as always is my co-anchor Snehisha, and over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Snehi, firstly, good morning and let's take a look at the US markets then.
Absolutely, and it's been a stellar day in trade coming in from the US markets, at least for Friday. Hi there, good morning. Let's take a look at what the US markets were up to, in fact, and stocks rose on Friday with the Dow Jones posting a fresh record high as investors ended a volatile month on a high note. And traders also mulled over crucial inflation data watched closely by the Fed Reserve. You had the Dow that jumped 228 points, or more than half a percent, to close at 41,563, and this blue chip index touched a fresh all-time high in just the final minutes of the trading session on Friday and closed at yet another record. S&P 500 advanced 1%. You had NASDAQ that also gained 1.1%. So all in all, it seems to be a good day in trade coming in on Friday if you take a look at Wall Street. Now, the personal consumption expenditure price index, which is the Fed Reserve's preferred inflation gauge, that rose 0.2% on a monthly basis in July and 2.5% from a year ago. The result was largely in line with what the street was estimating in terms of this inflation reading, and excluding food and energy, it also rose 0.2% from the prior month. Now, the Fed keeps a close eye on this metric, and it could still influence policymakers' rate decision in September. At the end of August trading, however, the S&P 500 posted a 2.3% gain, while the Dow climbed nearly 1.8%, and however, it was NASDAQ which surprisingly underperformed its other two peers because that clinched only a 0.7% advance for the month of June. For the month of August. The S&P 500 notched its fourth straight winning month, and a surge in consumer staples, real estate and healthcare helped lift the broad market index in August. Major averages suffered a steep sell-off at the start of the month. Remember, August has been a largely and fairly volatile month coming in for Wall Street. The S&P lost as much as 7.3% before recovering. So if you take a look at that recovery on S&P, it has been quite drastic. The Dow and NASDAQ were down as much as 5.4% and 10.7% respectively at their lows this month. But well, yes, it looks to be a stellar recovery coming in, at least for the monthly basis on all three indices. That is how Wall Street has ended. Let's take a look at what Europe did on Friday. Largely flat is what the European markets did. DAX closing flat. You had FTSE closing flat. Stock 600 also flat with a very mild, very minor positive bias. So that is what the European as well as the US markets have closed. Treasury yields also at 3.909, so not much movement on that front as well. But well, yes, this is what global equities look like. But Shreyanshi, also take us through what commodities did.
Well, absolutely. Firstly, let's take a look at oil prices, because oil prices did extend losses, and that's the kind of move that we saw coming in when you take a look at oil. So largely when you take a look at Brent crude futures, you're looking at a downtick of about 0.7% there as well. US WTI, similar downtick coming in for that one as well. So that's the kind of move that we saw when it comes to US WTI as well as Brent, and the losses followed a 0.3% decline for Brent last week and a 1.7% drop coming in for WTI as well. So that's the kind of handover that we had going into the week when it comes to oil. Now, the Organization of Petroleum Exporting Countries and their allies, a group known as OPEC Plus, is also set to proceed with a planned output hike from October as well, and that is something that the reports are stating, and that is something that is going to be in focus when it comes to the oil markets as well. Largely, that's the kind of handover that we have now. Of course, in Libya, you do have the Arabian Gulf oil company that has resumed output at about 120,000 barrels per day to meet domestic needs as well. So that's an important update coming in there. When you take a look at both Brent and WTI, you've seen them posting losses for 2 consecutive months. So on a monthly basis, that's the kind of handover that you have when it comes to oil as well. And this is largely due to concerns related to demand when it comes to China as well as the US that outweighed the disruption in Libya that we've seen coming in. And that is something that the market was also keeping a very close eye on. But for now, on a monthly basis at least, the market is looking away from the Libyan oil disruptions and looking at Chinese as well as US demand concerns at this point. So that largely is the handover coming in when it comes to oil. When we take a quick look at gold as well, you saw a drop coming in when it comes to gold prices. Gold softened as the dollar as well as the treasury yields firmed, and that largely is the handover coming in when it comes to gold as well, Snehi.
Absolutely, and before we move any further, I just want to quickly draw your attention to the implied open, indicating a fresh new record high for us this morning. 25,417 is where we are indicated to open. Quite the gap up open if you take a look at it on the spot basis, because we closed at 25,235. This is almost a 200-point gap up. That's the Nifty Open is indicating for us. So let's just see what happens on that front. But with that, let's also take a look at all the important events to watch out for today. And it's a day of manufacturing PMI rolling out from India as well as globally. So from India today, you have that along with the auto sales, because it usually comes on the first of the month. But yesterday being Sunday, we had some data trickling in yesterday. We'll have more of it today as well. In terms of global cues, the US markets will be closed today on account of Labor Day. So it's going to be a national holiday. From the UK, you have manufacturing PMI, Eurozone once again manufacturing PMI, and China as well. You have the manufacturing PMI data coming out today. In terms of the corporate action back home, you have Vedanta that will be in focus because the board is going to meet to mull its dividend today. So lots to watch out for on that front as well. And Indigo will also be in focus because they're all set to resume operations at the Delhi Airport Terminal 1. So let's see if this impacts the stock price, and if it does, by how much. So well, these are all the important cues to watch out for in today's trading session.
Well, absolutely, and lots of important news and updates to keep on our radar as well. Let's also take a look at US consumer spending that witnessed a solid rise in July coming in, suggesting that the economy remained on firmer ground early in the third quarter and arguing against a 0.5 percentage point interest rate cut from the Federal Reserve next month as well. Consumer spending, which accounts for more than 2/3 of US economic activity, rose about 0.5% last month after advancing by an unrevised 0.3% in June as well. The increase was in line with expectations largely. Meanwhile, the personal consumption expenditures price index rose about 0.2% in the month gone by as well, after an unrevised 0.1% gain in June coming in for that one as well.
Okay, let's talk about China now. And China's manufacturing activity sank to a 6-month low in August. The PMI index slumped to 49.1 from 49.4 in the month of July. That's a 6th straight decline and 4th month below that 50 mark. Meanwhile, the residential slump in the country deepened in August as expectations of a further drop in new home prices hampered the country's efforts to cushion the downturn. The value of new home sales from the 100 biggest real estate companies fell about 26.8% faster than the 19.7% decline seen in July.
Alright, shifting focus to some stock-specific action, then Intel CEO Pat Gelsinger and key executives are reportedly expected to present a plan later this month to the company's board of directors to slice off unnecessary businesses as well as revamp capital spending also. The plan will include ideas on how to shave overall costs by selling businesses, including its programmable chip unit, Altera, that the company can no longer afford to fund from the company's one sizable profit as well.
Okay, and Goldman Sachs is planning to cut a few hundred jobs as part of an annual review process aimed at low performers. The investment bank reinstated performance-related job cuts in 2022 after halting it for 2 years due to the COVID-19 pandemic. The layoffs that have already begun will continue through the fall and may impact more than 1,300 employees, or roughly 3 to 4% of its workforce.
Alright, well, that was your daily dose of morning news to go with your morning cup of coffee. But we'll come back after a break and take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. In Asia Pacific markets largely opened mixed as investors look toward a packed week of economic data as well as assess China's business activity figures released over the weekend as well. Among the economic data coming out from the major markets in the region, of course, you do have inflation data coming in from South Korea, Australia's second quarter GDP data, as well as data on pay as well as household spending from Japan later this week. Now, of course, like I mentioned, China released its official Purchasing Managers Index data for August coming in as well. The manufacturing PMI fell to a 6-month low of 49.1, a faster contraction coming in compared to the 49.4 seen in July as well. On your screens, you do have Shanghai that is down about 0.3%. Let's also take a quick look at Hang Seng then and see what that one is up to. On the other hand, of course, you did have China's non-manufacturing PMI also that climbed to 15.3, up from July's 15.2. Hong Kong's Hang Seng on your screens downtick of about 1% coming in for that one as well. And Shanghai was also in the speak. Let's also take a quick look at Japan's Nikkei then and see what that one is up to. That is in the green, currently up about 0.3%. Also crossed the 39,000 mark for the first time since July 31. So some strength coming in as far as Japan's Nikkei is concerned. But let's also take a quick look at South Korea's Kospi. Was previously in the red, currently up about 0.1%. Not much of a move coming in, but a positive bias regardless. Let's also take a look at Australia's ASX 200. That one is in the red, currently down about 0.3%. So largely a mixed handover coming in as far as Asian markets are concerned. So let's really see how that pans out for us. Of course, back home we shut shop around the 25,200 levels. And currently what is being penciled in is a rather muted start is what we're looking at in terms of the handover. Of course, there's a mixed handover coming in from Asia and a positive handover coming in from the US. So let's see how that really pans out for us. But we do have an uptick that we're penciling in. In fact, on at least back home, what we're expecting, Sneha.
Shyanti, if you take a look at the implied open, we have a 180 point uptick is what it's indicating on the spot basis. In fact, so gap up open is what is indicated for us. But on that note, let's also take a look at the lineup that we have for you today. At 8:05, joining us on the channel is Adrian Mowat, the EM equity strategist. So lots to talk about and good discussions following on that front. At 9:20, we'll be joined by Rana Gupta, Senior Portfolio Manager, India Equity Specialist, Manulife Investment Management. He's going to be here to talk about how to beat the street and what your strategy should be, the sectors that you should be focusing on to beat the street. At 9:30, we'll be joined by Jasbir Singh, Chairman and Chief Executive Officer of Amber Enterprises, and he'll be here to talk about the company's growth strategy and the roadmap going ahead. And keeping it with that, at 9:50, we'll be joined by the management of Quest Corp, Guru Prasad Srinivasan, the CEO, as well as Kamal Pal Hoda, the CFO of Quest Corp, will be joining us to talk about the growth strategy ahead. And at 10:20, we'll be joined by Manoj Tulsian, the Joint Managing Director and CEO at Greenply Industries, also here to talk about the growth path going ahead. Interesting conversations lined up for you on the channel with market guests as well as management. So stay tuned to ET Now.
Well, absolutely. And with that, let's also slip into news for the hearing impaired time. Welcome back. Thank you so much for staying tuned in. The board of Gujarat Gas has given a go-ahead for scheme of arrangement as well as amalgamation involving the likes of Gujarat State Petroleum Corporation Limited, Gujarat State Petronet Limited, as well as merging into Gujarat Gas. Let's go across to my colleague Samit, who's standing by to understand the rationale behind this. Samit.
Well, a big corporate action that has been happening among the Gujarat-based gas companies. So it's GSPC, GSPL, GEL that will be merged with Gujarat Gas, and post this merger is completion, the transmission unit will be carved out and separately listed on the stock exchanges, and it will be named as GSPL Transmission Limited. This entire process is expected to take at least a year to complete because it's merger of 3 companies into 1 company plus a demerger of another company coming out of the total merged unit of Gujarat Gas. Now, what is the merger ratio here? GSPC will get around 10 shares of Gujarat Gas for every 305 shares held in the company, and GSPL shareholders will get 10 shares of Gujarat Gas for every 13 they hold. Now, GEL will not get anything because the financial contribution coming in from GEL is literally nothing at this point of time. Hence, there won't be any share issue to GEL. Now, this valuation, this share swap ratio indicates a premium that GSPL shareholders will get, because if you see the 10 shares of Gujarat Gas, they are valued at close to 6,067 rupees, while the 13 shares of GSPL are valued at close to 5,750 rupees, which means that there is a premium of nearly 5.5% that GSPL shareholders get. Now, GSPC is currently an unlisted entity. It is primarily involved in gas trading company. Its average trading volumes were close to 15 MMSMD, while its average annual net profit over the last 5 years stood at close to 1300 crore rupees. Now, what is the rationale or the logic behind doing this merger and demerger? Firstly, the business synergies, efficiencies, and scale of operations. It was also to simplify the holding structure that is currently there, and also a value unlocking is one of the key reasons behind this corporate action that Gujarat government has taken up. Now, amalgamation of GSPC into Gujarat Gas would eliminate the related party transaction that has been currently happening, where Gujarat Gas purchases gas from GSPC, and this could also enhance the operating profits of Gujarat Gas going forward, also benefit its return ratios going forward. Also, amalgamation of GSPL into Gujarat Gas and then the demerger would simplify the layered holding structure. Currently, if you look at GSPC is the holding company which owns close to 37.6% stake in GSPL, while GSPL separately owns close to 54.2% stake in Gujarat Gas. Hence, to simplify the structure, this corporate action is being taken over. Also, this deal is EPS accretive for Gujarat Gas by more than around 50%.
Thank you so much for breaking down this deal for us, but let's also take a look at what brokerages have to say on this deal, and as you can see it on the ticker as well. First up, let's take a look at what Equities has to say about Gujarat Gas. They've upgraded this stock to an add rating from a reduce, gone ahead and also hike a target price to 667 rupees from 580 rupees earlier. They believe that Gujarat Gas is all set to emerge as one of the largest integrated players in this space, and huge cash flow generation will be taking place over and above the 3,500 crore cash pile that they're already sitting on, and they believe that this deal is going to be EPS accretive from the first year itself. Let's also shift focus, take a look at what MK has to say on this entire Gujarat Gas deal that has come in. They've upgraded the stock to a reduce rating from a sell and hiked the target price to 600 rupees from 500 rupees earlier. They say that the established pro forma merged Gujarat Gas PAT will be at around 3,500 crores or 38 rupees per share, implying more than 50% EPS accretion is what Somit also flagged off for us as of now. GSPL's outlook hereon is linked to Gujarat Gas is what MK believes, and the merged entity would benefit from the size, the simple structure as well as the synergies of this deal. However, they're also flagging off some challenges coming on to this deal. They say the challenges likely being faced are going to be the complexity of the business with the global gas exposure, capital allocation, and numerous Gujarat government entities still holding to sizable stake when it comes to this entire deal. So that's the notes coming in from Equities as well as MK on this entire Gujarat Gas deal that we've seen.
Well, absolutely, and Gujarat Gas is going to be in focus. But moving on, then capital markets regulator SEBI revised the eligibility criteria for entry as well as exit of stocks in the derivative segment to ensure that only high-quality stocks with sufficient market cap are allowed to trade in the segment. My colleague Ansh is standing by with a snapshot of what this really means. Ansh, tell us a little more about the details of the criteria as well then.
Yes, so the SEBI has finally come up with the list of inclusion and exclusion list eligibility criteria for derivative segment. So a stock to enter or re-enter into the F&O segment, it must meet the criteria for 6 consecutive months. First, maintaining average daily market cap and traded value among top 500 stocks. Second, a stock must have an average median quarter sigma order size of at least 75 lakhs. This is related to liquidity. Third is MWPL value of 1,500 crore, which was earlier 500 crore. And now this is related to band list. Fourth is average daily delivery value of around 35 crore. Whereas for a stock to be excluded, stock must fail this eligibility criteria for 3 consecutive months across all exchanges to be excluded. Now, if a stock is eligible on one exchange, then also it won't be excluded. Most importantly, once the stock is excluded, it won't be eligible for re-entering into the list for next 1 year. As per November report, the latest exclusion review can happen in December. So any actual exclusion may happen directly around Feb 2025.
Okay, and thank you so much for taking us through that. But while you're with us, which stocks will be on the focus on this on the back of Rejig, and in fact also tell us what to expect from the entire F&O space today.
From a report, 18 stocks have strong chance of being excluded and around 80 stocks have high chances of getting into F&O list. Now, Jio and Zomato are strong contributors in this list. Also, new FN inclusion could add Jio and Zomato into Nifty 50 as well in the March 25 review. Now, if we talk about our top few FN exclusions, then we are seeing that About India, United Breweries, Metropolis Health, Canfin Homes and Gujarat Gas could be few of the top exclusion potentials. Whereas if we talk about our top potential inclusions, then we are seeing Zomato, Varun Beverages, Jio Financial, Amar Raja Batteries and Adani Green in the list.
Ansh, thank you so much for that roundup coming in. So in terms of the new FNO eligibility criteria, you do have Nuvama Institutional saying that 18 stocks could be excluded. So that's an important update coming in there. 80 names will be qualifying for inclusion as well. And Jio and Zomato are the likely inclusion. So thank you so much for that update coming in, Ansh. But take us through the futures and options roundup also then.
In the previous session, we saw that FII have added around 25,000 long contracts. They have covered around 8,100 short contracts as well. So net to net, we are seeing addition of around 33,000 long contracts. So due to which the total long position has jumped from 69.5% directly to 71.9%, indicating the strong bullish sentiment in the market. Now, if we talk about Nifty, then the index has registered its biggest winning streak of 12 sessions, which shows very strong positive momentum in the market. Also, the index has touched all-time high level for third consecutive session. Now, if we check the option front, then we are seeing that good call buying is happening at 25,500 mark, indicating option traders are expecting Nifty to go above this level. Whereas on downside, we are seeing some put writing happening at 25,200 mark, indicating good support base forming around this level. If we talk about Nifty Bank, then if you can see the chart, then the index has actually given a breakout from its 4-session consolidation pattern. And today we have BSE BankX weekly option expiry as well. So we may see some good volatility action in banking stocks. Also, if we talk about few FNO stocks that are in focus, then we are seeing significant long build-up happening in AU Bank, Max Financial and Bandhan Bank. So keep an eye on the stocks.
And thank you so much for joining us this morning, taking us through a whole host of news flow as well as stocks to watch out for, at least on the FNO front. But let's just talk about India's Q1 GDP, because that growth has slowed to 6.7% in the first quarter of FY25. This marked the lowest growth in the past 5 years, and the growth falls short of the RBI's projection of 7.2% for the same period. Now, at the same time, the real GVA has grown by 6.8% in Q1 of FY24-25 over the growth rate of 8.3% in Q1 of the previous financial year. In fact, we caught up with a whole host of experts, Indraneel Pan, the chief economist at Yes Bank, and Jayesh Mehta, DSP Finance, on the same. Let's go across and listen in to what they make of this GDP performance that we've seen in Q1.
There was obviously a lower from the GDP side and the expenditure side. Obviously, the government's revenue expenditure, both at the center and the state, and the capex expenditure of the government was lower. That is likely to have pulled down the growth numbers to an extent. While we await for the sort of details in terms of the expenditure side as well as the production side, I would be more sort of interested in looking at how the private consumption has behaved, because private consumption was one weak element within the various quarterly GDP numbers that we have seen. And from our early understanding, or from our understanding of the first quarter numbers, there could be a continuing softness in the private consumption expenditure. And that's I think, where I would be looking at very crucially in this GDP number.
I think overall expectation was not too away. It was overall expectation was around 6.8. It's come a little bit softer than that, which is okay. And I think, with better monsoon, better seasonal, there are seasonal factors also. Hopefully, we would see the next 2 quarters. Maybe even you may see a little bit dippiness in July to September quarter, but the next 2 quarters looks quite promising. So overall, yes, this would be the lowest print, I think, for this financial year 24-25, and maybe we'll start improving from September, and that's where we look at it. We'll still go with an estimate of around 6.9 to 7 kind of a number for the whole financial year. So naturally, we do expect all the next 3 prints to come in higher. That's where the expectation is.
All right, then let's take a look at the word coming in from brokerages as well. When you take a look at what Morgan Stanley had to say, they talked about how the GDP growth at 6.7% is largely in line. They're also seeing broad-based growth momentum coming in, so that's also the word coming in from Morgan Stanley. And in terms of expectations, then they expect GDP growth at 6.8% in financial year 25 as well. They're also seeing improved consumption as well as robust capex coming in, so that's an important update coming in as far as what Morgan Stanley had to say about India's GDP growth. When you take a look at what Nomura had to say, they've lowered their financial year 25 GDP growth forecast. So that is lowered to 6.7% from 6.9%. And in terms of what else they're penciling in, they're expecting the RBI to begin rate cuts from October as well. So that's the word coming in from Nomura as well. Lastly, let's also take a look at Goldman Sachs and what they had to say. And they're talking about how this is largely in line with expectations, and they're also expecting higher sequential growth when it comes to government capex as well. And they also see sustained recovery coming in the rural consumption as well. So that's the word coming in from Goldman Sachs as well. Let's also look at what UBS had to say, because real GDP growth normalizes below 7% on a year-on-year basis is something that UBS highlighted. They're also talking about how the growth is largely lower than estimates, and they've also lowered their financial year 25 real GDP forecast by 20 basis points to 6.8%. When it comes to the policy rates, then what they're saying is that there's no rush to start cutting policy rates. And that is something that they're highlighting. So that largely is the handover coming in as far as what Brokerage Radar is shaping up to be like when it comes to India's GDP growth.
Absolutely. Lots to talk about when it comes to GDP, but let's also shift focus and talk about some other macro data updates. India's fiscal deficit has reduced to 2.77 lakh crore rupees in the first quarter of the current fiscal compared to 6.05 lakh crore in the same time last year. India has attained around 17% of the fiscal gap goal for FY25. Now, whereas revenue spending has reduced in the first quarter, tax collection has surged past the 10 lakh crore rupee mark.
All right, well, let's keep it going with macroeconomic data then. And India's core 8 sectors grew at a rate of 6.1% in July compared to a growth of 8.5% in the same month last year as well. So when you take a look at sectors, then steel, power as well as coal sectors saw strong growth coming in. Meanwhile, when you take a look at crude and natural gas sectors, that's where you saw a drop in the range of 1 to 3% coming in. So that's the roundup when it comes to core sectors.
And let's also talk about GST, because the goods and services tax collections in August went up by 10% from the same period last year to over 1.74 lakh crore rupees according to government data. This growth was observed across all categories: central GST, state GST, as well as the integrated GST and cess. The GST Council is likely to meet on 9th September or later, where Finance Minister Nirmala Sitharaman-led panel will discuss rationalization of tax rates, but a final decision on tweaking taxes and slabs will be taken later. She also said that the compensation cess on luxury and sin goods are also going to be discussed in the upcoming meeting.
All right, moving on to some important commentary then. On the sidelines of the Global FinTech Fest, we got to speak with the new chairman of India's largest bank. ET Now's editor-in-chief Nikunj Dalmia had a chat with CS Sethi. They discussed about the bank's health as well as financial goals going forward. Listen into a slice of that conversation.
I feel the next growth phase is also going to be MSME and agriculture. In the last 2 years, if you see, the credit growth also is secular in our book. It is not that it has come from only retail personnel. It has come from retail personnel, MSME, agriculture, and corporate. So, the enablers which we have put in place in the last 3 to 4 years, I have an opportunity to leverage them, and I see a growth potential. And we are, you're aware that we are proxy to the Indian economy, and I'm sure I made a statement somewhere to my employees that if this is India's decade, it also has to be an SBI's decade.
So SBI has been maintaining a credit growth which is higher than India's nominal GDP. It's always 1.5 to 2% more than India's nominal GDP. Assuming that the nominal GDP is going to be anywhere between 10 to 11% or 11 to 12%, can I assume that the 13 to 15% credit growth for multi-years is here to stay, not just this year, but couple of years?
Yeah, I think it looks like. While you're right that and much of the credit growth is intertwined with the GDP growth rate, I see that our guidance in terms of 14 to 15% credit growth looks like that here to stay for at least a couple of years.
Return ROA, the most magical number for SBI, is now above 1%. NIMs are perhaps best in the industry. Corporate profitability is really growing in the in double digit. So can I say that if not this year, certainly next year, SBI is on course. I'm going to hold my breath when I put that number. Is on course to be the first company or the bank in India, that number, to cross 1 lakh crore.
Without sounding, giving a forward guidance, I can say that this institution has the potential to reach.
But am I thinking right that you headed there?
We are heading there. We are heading there, and obviously the aspiration is to be there, and the aspiration to be the first company to be there. And I strongly believe that this company has got, bank has got the potential to reach.
If you have to reach this mark of 1 lakh crore, you need the economy and the credit cycle in your side, and you need the NPA cycle not on your side. These are two things which have to happen. Economy and credit cycle has to be with you, and NPA cycles have to be away from you. So can I say for 3 years you don't see an NPA cycle coming in corporate also and in unsecured loans also?
I think let's first talk about the corporates. I think corporates by and large are deleveraged, and they're also cautious in terms of borrowing.
Okay, so on that note, let's slip into a very short break on this edition of Market Cafe. More stock-specific news and updates when we return on the other side of this short break.
Welcome back. Thank you so much for staying tuned in. Well, let's get to the list of stocks that you should keep on your radar bright and early this morning. And Ria is standing by with just that list. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have NHPC and Railtel, for which the government has granted the Navratna status. Now, after being granted this status, the companies are now going to be allowed to invest up to rupees 1,000 crores or 15% of their net worth in a single project without government approval. They will also be able to invest up to rupees 30% of their net worth in a year, as long as it doesn't cross rupees 1,000 crores. And further, they can also establish overseas subsidiaries and joint ventures, and also undertake organizational restructuring in order to optimize their operations. Let's move on though to NBCC, for which the board has announced a bonus issue in the ratio of 1:2, and the record date has been fixed as October 7th, 2024. Lastly, we have MOIL, which has announced a price change with effect from the 1st of September 2024, and they've reduced the prices by 15 to 20% overall. Now, the prices of all ferro grades of manganese ore with manganese content of 44% and above has been decreased by 20%. The prices of all other ferro grades of manganese ore with manganese content below 44% have been decreased by 15%. And lastly, the prices of all the SMGR fines and chemical grades have also been decreased by 15%. And further, the basic price of rupees 2,10,000 per metric ton of EMD has been decreased to rupees 2,05,000 per metric ton.
Yeah, thank you so much for taking us through all that list of all the stocks to watch out for today. But let's also take it across to my colleague Gaurav, who's joining us with a roundup of what the brokerages are flagging off this Monday morning. Gaurav.
Well, yes. First, let's talk about Gulf Oil, because Systematics has now initiated with buy rating and a target price of 1,700 rupees per share. What they believe is that the company will continue to grow its market share in lubricants, and at the same time they are getting into EVs and DC cooling liquid segment, which will actually help them to grow their volumes higher than the industry, which can actually help them to grow their PAT at a 14.5% for the next 3 years. And at the same time, we may see the company getting ROC of around 27%, and that is why they are being bullish on this company. Next, let's talk about Axis Bank, because UBS has now increased the target price to 1,250 rupees. What they believe is that the sectoral headwinds and the poor performance in Q1 is what has actually led to the underperformance of the stock. But from here on, weakness is likely to remain. But at the same time, when we talk about valuations, that they are actually at a discount to peers, and which gives an attractive case for an entry, and that is why they have increased the target price to 1,250 rupees. Lastly, let's also watch out for some cement sectors, because cement stocks, because Macquarie has now changed the target price for a few. So for example, for Dalmia Bharat, Ambuja, Ultratech Cement, they have increased the target price, while for Ramco, ACC and Sri Cement, they have decreased the target price from the previous one, because what they believe is that we have recently seen a sector consolidation, and that will actually help in the medium term. At the same time, cost efficiency targets will also help the companies to get the margins. But at the same time, when we talk about the demand scenario, it has remained healthy, but cement prices have remained muted, and this is likely to remain for Q2 and Q3 as well, and that is why we may see some subdued performance from these companies. And in this environment, they have suggested waiting for a better opportunity for entry points, at the same time better valuations in these companies, and that is why they are being a little cautious, where they have tweaked the target price for a few companies. So definitely watching out on all these counters on the back of the brokerage note that we have received today.
Thanks, Gaurav, for that update coming in. Moving on, then, August auto sales data has started trickling in. Two-wheeler sales are in line with expectations, except Eicher Motors RE. In fact, let's go across to my colleague Ashesha, who's standing by with a snapshot and more details on this.
Well, yes, we haven't seen any fireworks as far as auto sales numbers for the month of August are concerned. First up, let's talk about the passenger vehicle segment, where we have seen a decline for the second consecutive month in the month of August. One, of course, is on account of higher base, and car makers are reducing their inventory, and that also impacted passenger vehicle sales numbers in the month gone by. So Tata Motors PV declined by about 3% on a year-on-year basis, and Maruti Suzuki also reported a decline of about 4%. Apart from this, as far as commercial vehicle sales are concerned, that too disappointed this time around. So Eicher Motors reported a decline on a year-on-year basis, and Tata Motors CV also reported a decline of about 15% on a year-on-year basis. As far as the two-wheeler sales are concerned, that was the only saving grace this time around. All companies barring Eicher Motors reported a good set of numbers this time around from the two-wheeler segment. So TVS Motors up 13% YOY. Hero MotoCorp reported an uptick of about 5% on a year-on-year basis. And as I mentioned, Eicher Motors RE reported weakest set of numbers, which saw a decline of about 5% on a year-on-year basis. Let's also look at the commentary that these companies have given. So first up, Hero MotoCorp, where they say that monthly sales were impacted on account of supply disruption in the month gone by, but they are very hopeful of revival in demand in the upcoming festive season. Maruti, meanwhile, has a very strong order pipeline, where they say that they have over 1 lakh booking across models. So as far as Maruti's order booking is concerned, that continues to remain very strong. But all in all, no major fireworks, no major negatives or positives. Two-wheelers were the silver lining this time around, but all eyes will now be on the upcoming festive season. Ashesha, thank you so much for taking us through that. So most auto sales numbers have already trickled in, and two-wheelers seem to have done pretty well for themselves. Let's also talk about another stock that's going to be in focus today on the back of its analyst meet, and that is Dialis India. Now, the new management has decisively shifted from the strategy outlined in Q3 back in FY19 earnings call. They're now aiming to adopt an asset-light model with limited mid-term capex. So that is a key takeaway coming in from this meeting. The attention now is going to be completely shifted to the domestic crop protection business, and growth strategy is going to be focusing on 5 key areas going ahead: expanding customer access, enhancing the product portfolio by addressing the existing gaps, prioritizing the crop nutrition business, strengthening the in-house R&D that they have, and pursuing new tie-ups and collaborations. These are going to be the 5 pillars on which the company is going to be mapping its growth strategy. The management expects these initiatives to drive absolute industry growth rates and improve the margin by 5 percentage points over the midterm. The management also noted that while industry volumes have improved, prices remain depressed due to above normal channel inventory in some areas. They also acknowledged the overcapacity issue across products and believe that the supply side correction is essential for recovery. And lastly, they also said that profitability in the exports business remains under pressure, with challenges in both existing products as well as potential launches in the export market. So, well, those are all the key takeaways from the Dialis India management meet.
Well, absolutely. And with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere, because the market takes all of the action forward.